Eric Mwatha with Mwatha.com. Market analysis for the weekend of April 4th and April 5th, 2015. Let's take a look at how US markets closed on Thursday. And we see here slightly unchanged, slightly high on the Dow, NASDAQ, and the S&P 500. Gold was down slightly. We see that crude oil was down about 1.9%, and we see that the VIX was down about 3%. For the week, the NASDAQ was almost unchanged. We see that for the week, the S&P 500 was almost unchanged, also down 0.29%. We see that for the week, the Dow was slightly up 0.29%, and that's a surprise. And we see that the biggest mover actually was the Dow Transports, which were down a percentage point. So let's take a look at the charts. We begin by taking a look at the NASDAQ weekly, and we can see here from the NASDAQ we are continue holding above the 10-week moving average, which is a sign of health. And if you take a look at the trend line in terms of the weekly RSI, we can see that on the top side, when we come to this level, we seem to be getting into trouble with this resistance here. And now it looks like we are holding steady on this bottom side of the wedge. Eventually, if we move out of this wedge, breaking out above that wedge would be bullish, and breaking below this weekly wedge would be bearish. So we'll have to wait and see which direction the market wants to pick. For now, my thinking is based on the daily charts that the market surprisingly is not broken yet. In other words, the market looks good as of Thursday's close, because if you take a look at this very obvious trend line, the market held. In fact, it's held there twice on the daily. It also happens to be an area where we have this 50-day moving average. So lots of support around there, and they seem to be holding. We have to give the benefit of the doubt to the market. If you take a look at the line we've been watching on the daily RSI, we can see that we've come here twice, and as of the close of this past week, those two levels have held. So that's one layer of support. The other layer of support comes from this line where the market has been showing support. So the market is bouncing on those two lines. As long as that's the case, we have to assume that this market wants to move higher. Obviously, if that doesn't hold and we break below those two lines, then the market is going to be giving us an indication of downside potential. I think right now the potential looks like it is support, and we have to play support until we see the break. We can also see that that line here has been where the market has been bouncing. For those who are new to this analysis, we can see if we go back to even these lows, this is where the market has been finding support, moving higher each time. Double bottom here, which was this lows, we touched there, which was the lows there, came close here, short-term lows, and recently we are bouncing on that line. So that is where we would expect to see support, and support is taking place exactly as where the market has been seeing support the last couple of years. If we take a look at the Dow weekly, similar to that of the NASDAQ, we see that we are continuing to trade in a wedge. And so simply put, above that wedge would be bullish eventually, and if we break below this wedge, that would also be calling for a bearish move. Keep in mind that the market is very close to 50 on the weekly RSI for the Dow. If it cracks below 50, expect a big down week. Keep in mind, if we go back to the price level, as of right now, the most recent breakout did fail. So the weekly breakout above 18,140 failed, and that could be a problem even though the market has decided to go into a consolidation phase. Eventually you'd like it to break out, and if it can break out and hold above 18,140, that would suggest that momentum has come back to the side of the market moving higher, but that breakout needs to take place before we can call this a runaway market. If we take a look at the Dow daily, and just here to spend a second, just like on the NASDAQ, we got support on this trend line connecting these lows here, here, and now here and here. So as long as that is holding, that's a good market. And just like the NASDAQ, we saw that the lows are holding. As long as that is holding, that's great. The bulls are in control. And as long as it is bouncing on the line where it's been seeing support, then this is a good market. You can see this support can also be seen on the Dow, connecting all these lows on the same level. And so as long as that's the case, this is a good market. We can turn bearish at some point should we break below those two lines. Right now, the market looks good based on those daily charts. Take a look at the Dow hourly. And we can see that on the Dow hourly, there's another trend line that can be seen on the hourly chart. Very easy to identify here. As long as the market is bouncing on such obvious trend lines, we have to respect the potential for a bounce. Obviously, if we ever break below that trend line, then we can turn bearish. On the hourly for the Dow, we also see support on this line where the market has been bouncing. In fact, just to show you quickly that this is where recent hourly lows have launched the market higher once it recaptures the level above the green line. And so we see recently even here for a nice hourly move, and we've come here twice and held, which are these lows here. Indication there is that the hourlies also indicate the market is showing support and could be poised to go higher. As mentioned earlier, the biggest problem in the current market can be seen by the transports. As you can see, the transports are now very close to breaking this multi-year trend line going back to late 2012. Now, it hasn't broken yet, it's very close to. So if this breaks, that could start asking serious questions about the market's intention. If it holds, maybe this market is not broken. So it's on the line, closed on the line. If it holds, that's good. Otherwise, if it fails, serious questions are going to be asked. If we take a look also at the trend line on the weekly RSI, as mentioned last week, there's this line here, and I'm going to extend it. This was a breakout entry here. Once we broke out somewhere there, you can see that the market went on a fantastic run to new highs. So we extend the same line. So again, extend this line here, and you can see that since then the market has been using the same line for support. And what I'm getting at here is support there is we are back at that line. So my thinking is that if this can be another bounce territory, and if that line holds, the suggestion would be that eventually this moves to the upside. Now let's take a look at this level here, 8649.32, and I want to show you that on a clean chart for the Transport weekly, and that level is this weekly closing low, which happens to be the previous weekly closing low for 2015. And again, that price level there is 8642.32. So as long as it is below this previous weekly closing low, that could be a problem. But if it bounces back above that level, maybe the market is showing a bounce. For now, it closed below that, so that's a little bit of a risk. But depending on whether it can recapture that level, that can be a problem for the market going forward. So if you're looking for a reason to stay short or to be short, you can watch this number here. Again, it's 8642.32, Anything above this shows the market is okay. If the Dow Transports stay underneath this line, showing that it is recording new weekly moves to fresh lows for the year, that could be suggesting that the market is also still looking to go lower. So that would be the number to watch short term. Above that, bullish; below that, bearish. Now, if we take a look at the Dow Transports daily, we can see that we are around the 200-day moving average, which needs to hold to keep the market still on a bullish trend. The previous breakout, this band of support, needs to hold. Ever since the market jumped above that level, it has been using the same level for support since then. And again, and recently it's been trading in this range. So it needs to hold above the 200-day and also needs to hold above this line. If the market breaks those two lines, that could be a problem for the general market. If you take a look at the RSI, we can see that it needs to be above this line where it's been bouncing. It needs to be above that line. Otherwise, this is probably a different phase of a market, because the same line has been used successfully during these pullbacks on the Dow Transports and also for the general market. And so now the question becomes, if it is going to stay below that line, and those are recent support there. If it stays below that green line, that could be a problem. Also, we can see that the previous line of support has broken. So this line, which is holding on the Dow and the NASDAQ, is now broken, and it has actually turned into resistance there. So this line could be a problem. If it stays below those two lines, maybe the market is now starting to look more bearish than it seems on the surface. The Dow Transports hourly, I just want to show you that on the hourly we have this wedge connecting recent highs and recent lows. Obviously, if we break below this wedge short term, a break of that wedge would be bearish for the Dow Transports. S&P 500, go back to the recent breakout attempt which failed, and that breakout attempt was trying to move above 2110, which failed. So that could be a problem. But if we come to the RSI, we see that we are also within this multi-month weekly RSI wedge. Obviously, if we break out above that, that's bullish. If we break below that, that's bearish. Keep in mind where we are trading on the RSI, moving below 50 whenever that takes place. If we move below 50, expect a big down week for general markets. Let's switch gears here and go to the Canadian market. We take a look at Canadian market briefly on the daily. I still contend that we are trading within this wedge, and movement either above the wedge for a bullish move can take place, or maybe eventually we break below the wedge for a bearish move. So since we are within the wedge, it is tough to call this one, because until we conclude outside of this wedge, it's tough to tell which way it wants to go. Keep in mind that we are trading very close to both the 200-day moving average and the 50-day moving average. So that's an area of consolidation, and as long as it's within the wedge, tough to call. But if we take a look at the hourly short term, we can see on the short term basis there is a line of resistance if you draw connecting the highs, and as long as it is below this line, expect the market to be a little bit on the pullback mode. Otherwise, if the market can figure out a way to break out short term, then that could suggest higher prices. For now, it looks like resistance based on where the market closed on Thursday, suggesting that maybe the beginning of the week could be lower. Back to the US, if we take a look at Apple, you can see that it's still trading sideways after making recent highs, still trading sideways there. Also trading above the 10-week moving average, which is a sign of strength, or at least a sign of consolidation and good momentum. So trading above the 10-week moving average is good. Those looking to buy the next breakout can use the recent all-time weekly closing high of 129 129.50. You can use this as your next trigger point for a breakout. Otherwise, the chart looks good in my opinion. As of right now, if we take a look at the daily, we can see that the daily is finding good support at an upward trending 50-day moving average. Very nice consolidation there. We can also see, like the main markets, the lows on the daily RSI are holding. So as long as this is holding, expect the market to be pushing this one higher over time. Otherwise, it's only if the daily, short-term daily support line breaks. If we break this short-term support, that could be a problem. For now, it looks like it's holding very well above that line. So this is a nice trending period for the stock. Quick look at the hourly. And we can see that on the hourly, it came back to this trend line here, as we discussed last week, and seems to be holding. And as long as that's the case, the stock looks okay. You can also see that there's a wedge here if you really want to go into the detail. There's a wedge developing on the 30-minute chart. So those of you who like to trade this short term, breaking out there would be good. Breaking below there would set up for a slight hour-to-hour, maybe even a day-to-day pullback. Otherwise, in my opinion, looks great as of close of this first week of April 2015. Let's take a look at, to me, the area that is showing the biggest indication that the market continues to be strong, and it is the VIX daily. If you take a look at the 6 months daily chart for the VIX, you can see price channel resistance. Every time the VIX tries to move, it can't seem to hold above this line. As long as that's the case, then this is a market that is indicating, or at least an area of the market indicating, lower prices for the VIX, higher prices for the general market. If we look at the daily RSI, we can see that this is where it's been showing resistance on this declining RSI line. Very simple line. So as long as these two lines on the price and also on the RSI are showing resistance, this would suggest that the general market is still bullish. Obviously, if we can break out at some point above this line and above this line on the RSI, that would suggest that the VIX has now changed its mind and looking to go higher. So above the line would be indication of market going down. Right now it looks like the market is showing resistance on the VIX, which is bullish for the general market. We can see here in conclusion for this part 1, part 2 is going to be available for subscribers during this weekend. But if we take a look at the VIX hourly, you'll see here that the hourly still continues to indicate resistance. If you take the highs like that, we hit this level about 2 days ago, and we can see that this has become resistance for the VIX. The VIX has pulled back. The market should be okay. And also we see that the VIX failed to move above this red line, which has been resistance recently. In fact, if you go to all these highs on the VIX, this is where resistance would take place. All these highs on the VIX suggested that the market was a buy, and even this high on the VIX. So right now we are looking at the VIX as of the close, showing that the market should, at the very least, the market should be favoring the bulls. Have a great weekend. Eric Mwade, good luck, peace, and blessings. Woo!